What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig. We're going to be going over the charts, first taking a look at the Dow Jones, then taking a look at, of course, Bitcoin and where I think we're headed. If you guys have been following me on X, you've seen the charts I've been posting, one all the way back since the middle of May, playing out beautifully. That's the Elliott wave count, but I've showed plenty more last week and the week before. I'm going to show you some that I warned you of this coming, and we'll take a look at it. Let me know what you think in the videos. Make sure you guys smash that thumbs up, leave your comments below, share the video if you would, and don't forget to subscribe to the channel. That'll get you notified when I post new videos. Again, I will be starting members only videos going over altcoins and charts of your choice. I'm going to try and start that next week, maybe midweek in the evening. I will let you guys know. But anyway, let's get into the charts, see what's going on. Bitcoin is starting to get interesting again. All right. So as you can see, the Dow Jones, yesterday, or 2 days ago, I posted a video right before this, or I'm sorry, I posted a post on X right before this broke. And I told you guys the measured move of this would be around $40,000. As of right now, we're getting a bounce on the 50 EMA. That usually happens. If you look back, we always bounce around that area for a while. But if we do break that, I'm looking for the 40,000 range, which would take Bitcoin down to at least 50,000 in my opinion, possibly much lower. We're going to take a look at those targets. As you can see, I do believe this is the Great Depression from 1929 on the right. This is where we are now. I do believe, although we could pump a little bit higher, I know everybody thinks that because of the election, they're going to pump it higher, but that's not necessarily true. That would be a good way to get people to keep their money in there while they dump it, but we'll see what happens. Either way, even if you bought down here back in, 2013 and you made all kinds of money, if you haven't taken profit, there's a good possibility you could lose that money. Just be careful out there, guys. Before we get into Bitcoin, if you guys haven't checked out Prime XBT, definitely check it out. By far my favorite exchange. They don't trade against you like the scammy exchanges. By using my link below, you can get up to a $7,000 bonus plus 25% off of your trading fees. Definitely check them out. You can trade traditional markets, Forex, gold, silver, oil, S&P, Dow Jones, everything all from one exchange, so you don't have to switch back and forth and move a bunch of money around. You can do it all from one exchange. They do sponsor the channel. So let's take a look at this right here. Everybody's calling this a bull flag, right? As you can see it. If you've ever taken a look at, let me show you, Wyckoff distribution sure looks like a bull flag, doesn't it? Well, there's a good possibility that Bitcoin has topped. I will show you the areas to watch. If we break that, we could go higher. But even if we did break the high one more time, I don't see it going higher than 78 to 84,000, somewhere in that range before crashing down. And that's only if the stock markets take one last pump up. But as of right now, let's take a look at where we're at. If you guys follow me on Twitter or have been keeping up with my videos, I do have an Elliott wave count here that could get us down to as low as 3,500 to 9,700. I know that sounds crazy, but let's piecemeal it first, right? So we've talked about our target area for the third wave within the third wave, right? Being somewhere between 40,000 and 43,000 before we get a bounce and then continuation down. But let's take a look at the most recent action, right? If you guys were following me on X, you would have known back in May, it was the middle of May, I posted this short zone and said anytime we get into this zone would be a great place to short. And if you did, you're doing pretty damn well. But anyways, regardless, let's look at this. This is what I posted last week on Twitter. This is the exact chart I posted, right? If you can read that, it says target if the bottom channel holds, which it didn't. We made that video right here. That was August 24th. Was it? Actually, it was either August 24th or September. Yeah. Oh, I'm sorry. It was August 30th when I posted this, and we did break. And as you can see, we're breaking down. There's another trend line here. We're going to take a look at that in the next chart. I'm going to show you all my targets and where I'm looking for bounces, right? So if we break back below or above this trend line, which is going to be around, depending on when it hits, somewhere between 56.2 and 56.6 if it happens within the next couple days. If we can get back above, then we look to retest this 59.5 area. Although I'm not so sure that'll happen. But what is the measured move from this? 50,000. So that's my measured move from the break of this, with the invalidation of breaking back in this somewhere along the 59.5 range, right? So as of right now, my main target is 50,000. 50 to 52,000. Obviously, this doesn't have to be exact, right? Which we're getting pretty close. But this is the chart I showed yesterday before this broke, right? I said if this bottom trend line break, we could look at this as a measured move, right? Take the widest point of the triangle to where it broke down. And where does that get us? That gets us all the way down to 33 to 35,000. Now, if that happens, would it be one straight candle? It's possible, but it doesn't have to be, right? We can look at other ones. Let's look at this whole thing. So if we look at this triangle back here, right? We take the measured move of that triangle, bring it to where it broke down. That got us to this red zone, right? We finally hit it back over here, but it didn't go straight down, right? And then let's take a measured move of this rising wedge. Boom, right here, right where it broke. We hit that area, got a nice bounce up. Now that, like I said, it doesn't mean we crash straight down, right? Let me get this out of the way. Doesn't mean we crash straight down, so it could do a number of things. It could go, you know, straight down like this. We could bounce around, come back up for a retest, come all the way back up. You know, it could take a while, but nevertheless, this is the target of that break, unless we break back up inside this triangle, right? And then you can see this red area here. Let me show you what that is. Let me get this stuff out of the way. Try to keep the charts a little bit clean. But if you guys are familiar with fractals, if you look at this high to this low, right, it dropped way down here, and then we had this rising channel, which that's our measured move to 50, right? It could go much lower, because if we zoom in over here, same type thing. We dropped down below, made a rising channel, and then we made a lower low than over here. So if we do that again, it would make sense to be somewhere in that 40 to 44,000 range that I showed you in the Elliott wave count. So another area I'm looking for. Now, in the macro picture, this is why I believe we could have already topped. If you look here on the left, we have the Amazon bubble, right? And I know I showed this chart a lot in the last couple of years because I thought this was this high, right? But then once it formed, when things form, then you can really take a look. All we did was made a higher high, peaked, and then came down. And I do believe there's a good possibility this is what we see. Again, that goes along with the traditional markets crashing. That was to happen, right? This was a 95% correction. Bubbles always return to where they began, right? You can see the red high volume node here. Same thing here. Red high volume node. If that was to happen again, that would get us down to, like I said, somewhere between that 35 and 9,700 range. If the traditional markets crash, be careful out there. I know a lot of people really believe it's going to 100,000. I don't even think if we make a new high, it's going to get that high. Like I said, between 78 and 84, somewhere in there, maybe, to finish off a Wyckoff distribution. So just be careful, be cautious out there. Don't expect this thing to continue up. If you really look at Bitcoin for what it is, it's a high risk asset, right? If the markets crash, what is the first thing people get out of? High risk assets. So thanks again for watching, guys. Don't forget, give me a follow. Check out Prime XBT. If you are trading, you'll love it. There are a few different ways to trade. I'll leave you a video right here. So anyways, thanks again, guys. Make sure to smash the likes, leave a comment, subscribe to the channel, and share the video. I appreciate it, and I'm out.